Hello, and thanks for joining us at xm.com for this weekly Outlook video. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. And we'll be looking at the week ahead. So Marios, the schedule is very busy next week. Let's begin in the US, where the Fed is certain to cut rates on Wednesday. And we'll also have the latest non-farm payrolls report on Friday. How do you think the dollar will perform?
Well, the Fed is virtually certain to cut rates. The real question facing the markets is by how much they will cut. So if you look at market pricing, a 25 basis points rate cut is pricing with 100% probability. So that's a done deal. The question is, will they deliver a 50 basis points rate cut so they surprise the market and add more stimulus, let's say, than is currently priced in? Now the probability, the market probability for a 50 basis points rate cut is 20% at the moment, which in my opinion is 20% too much. I think that they will only cut by 25 basis points, and the arguments are very simple really. You don't want to use so much of your limited firepower so early on. And secondly, even the most dovish policymakers in the Fed have recently come out and argued against a 50 basis points rate cut, saying that it's excessive and it's not needed really. I tend to agree with them, so I think there's very limited scope for a 50 basis points move. Now, what does that mean for the dollar? Since more easing is priced in that the Fed is likely to deliver on Wednesday, that means that the immediate reaction in the dollar might be a spike higher, right? Now, whether that spike is sustained though in the following minutes or hours will depend on the signals that the Fed sends about the scope and the pace of future rate cuts. Is this a one and done rate cut, or is this the beginning of a prolonged easing cycle? I believe it will be the latter. So they will say we are cutting today and we might very well cut a few more times, depending of course on how the economy evolves. So that argues for a weaker dollar overall. So combining these two, I think we are likely to see a spike higher on the decision, but that any gains the dollar might remain relatively short-lived.
I see. And the Fed won't be the only central bank that meets during the week, though. We'll also have the Bank of Japan's rate decision on Tuesday and the Bank of England's on Thursday. How do you see this affecting the yen and the pound?
Well, the Bank of Japan already has a massive stimulus program in place. So, they are likely to soften their tone a little bit just to take some of the strength, just to ease some of the yen's strength, let's say. But I think that any market reaction will be rather minimal. A more interesting event might be the Bank of England. So no action is expected, but until now the Bank of England had maintained a slight tightening bias, so interest rates might need to rise over time. Now the economy has been performing very poorly lately. Brexit uncertainty has started to take a toll, and some economists even expect a contraction in GDP growth during Q2. That means that the Bank of England will most probably abandon its tightening plans very soon and turn neutral. This might happen this week, as early as this week, and if it does, it argues for a weaker pound overall, but perhaps any downside might not be massive because the markets are already pricing in rate cuts by the Bank of England this year, so it won't be much of a surprise, let's say.
All right. And last but not least, we have an avalanche of key data coming out throughout the week. What should we look out for in particular?
You already mentioned the payrolls report from the US that will most probably be the highlight of the week on Friday. But before that, we get some very important data from the Eurozone. We get GDP growth for Q2 and the latest inflation figures. Now, this will be very important because yesterday we saw ECB President Mario Draghi come out and effectively communicate that the central bank will deliver a comprehensive stimulus package in September. So more rate cuts, perhaps even more quantitative easing. It's virtually certain that they will ease in September. So the incoming data we receive from now until September will probably shape expectations around how big of a stimulus package we are likely to get. Now, overall, I believe that the outlook for the euro is negative. But here's the caveat. I think that the euro is likely to lose more against the yen and the Swiss franc, not necessarily against the dollar. Why? Both the Fed and the ECB are easing their policy, but the Fed might ease more aggressively than the ECB overall. So both the euro and the dollar might weaken, but the dollar might weaken more than the euro, which argues for a higher euro-dollar over time. Now, besides the euro area data, we're going to get the latest inflation figures from Australia, and we'll also get the official PMIs from China. And last but not least, we will see the trade negotiations between the US and China resume in Shanghai on Monday. Those will be very important for risk appetite and risky assets like stocks or safe havens like gold.
Marios, thanks for joining me, and thanks for watching at xm.com.